as a shareholder, you've seen brilliant returns. I think around about 20% year on year for the last 5 years, which is incredible. What is Harley Davidson without the iconic engine, the thrust of the engine? It's almost like Nike changing their ticker symbol to a cross.
Hello everyone, welcome back to another FinMeUp weekly wrap where we cover the most important news that happened during the week from both JSE companies and US companies. During this week, we also posted a few interviews with some of our mentors where they shared their top JSE picks for the year, so make sure you check that out. Also check the FinMeUp app out where there's more stock picks from other mentors, more educational content, quizzes, and just an awesome educational experience. So the links are in the description. So let's get to it today. Quite a few news, back again, everybody's working again. The first one is Woolworths. So Woolworths announced that their EPS, which is the earnings per share, is expected to be between 285 cents and 302 cents, which is basically 2.85 and 3.2, which represents an increase of between 70 and 80%. So a 70 to 80% increase in earnings per share. That looks good. The group's turnover and concession sales for the 26th week, which ended 25 December, increased 18.5%. So, I mean, this looks good. Woolworths expects the sale of its entire shareholding in David Jones to be completed by March 2023. Paul, what do you think?
Yeah, I think this obviously looks good to go. That's quite a very good run for Woolworths, especially post-pandemic. But it is interesting to me is the online sales. So you would think, post-pandemic and the world, going virtual, that the online sales would actually increase. And it actually decreased from 13.7% to 10.9%. So I thought a little bit about it. Why is this? Because you would expect the opposite. I think people, firstly, you have to ask yourself, are they making more money or less money with online sales? So online sales is more scalable, yes, but I think actually they make less money. Because think about it, our people are less condensed than what you would think. Not a lot of people actually makes use of online purchases when it comes to clothing. Yes, with other things, of course, but not with clothing. And I think with fuel being super expensive at the moment and the transportation logistics that we have, maybe it's not really a bad thing that the online sales actually decreased. And except for that, I mean, earnings per share going up between 70 and 80% is amazing results.
Yeah, and I'm not a big retail fan, but my favorite two retailers are Woolworths and ShopRite, but I think ShopRite tops it. The next company, KaapAgri. I know that we spoke about KaapAgri. Anthony Clark gave a few insights about it. It's one of my picks, wrote about it on the app. Paul, I know you're also bullish on KaapAgri. They gave their integrated annual report, and basically their revenue grew by 48.4% to 15.7 billion rand. Their EBITDA grew by 21.8%, cash flow from operating activities of 213 million rand, despite the inflationary impact on working capital, and return on equity reported at 16.6%, which exceeds the company's maximum target of 15%. What do you think?
Yeah, obviously, Igor, we've covered KaapAgri quite extensively. So, in a nutshell, it's a brilliant company trading at below intrinsic value, in our opinion at least. And the expansion into oil opened up an array of possibilities for the company. What is interesting here is, for me, is the inflationary impact. So what we see in 2021, 2022, leading into 2023 is of course worldwide inflation. And the effect of that is in the current period when you have your CapEx expenses and your general inventory expenses that will obviously be higher now because of inflation. So that's why you see a very a proper jump in revenue, 48%, but the EBITDA a little bit lower because of the expenses. But in the next period, when you actually sell all of this inventory, if you don't compromise on your margins, you will also generate a lot higher revenue. We'll also see this in companies like Santova, for instance. So I think, KaapAgri, this being the period where they kind of invested a lot, we will see even higher revenue generation in 2023.
Very interesting. Just not oil, fuel.
Yeah, fuel, yeah.
Basically goes hand in hand. Yeah. Another company, which is a monster on the JSE, Richemont. What an incredible company. The sales increased 18% for the 9 months ended 31 December. 18% revenue growth for, sales growth for such a big company. It's incredible. What do you think?
Yeah, I think economically it's probably one of the best companies on the JSE. Looking at the financials and the valuation, I think, given that it is a brilliant company, it is a little bit expensive for me. So as a shareholder, you've seen brilliant returns. I think around about 20% year on year for the last 5 years, which is incredible. But they're trading at around about a 30 PE multiple, and just looking at the company from a shareholder's point of view, I think there are better opportunities elsewhere. But once again, great update for Richemont.
This is just one of those companies that always look expensive, but then they just keep
It's
delivering.
like
So
Tesla. Yes,
congratulations.
yes.
Yes, another company that's well known but hasn't been performing well, and that's Coronation Fund Managers. So they announced that their total assets under management are 602 billion rand. But if they just don't seem to impress. I don't know. What's your take?
Yeah, me being a financial advisor now, I've actually worked with quite a few of the asset managers. Coronation is actually, I think, top three biggest asset managers in South Africa, or top five. So they are, doing pretty well. So there's two ways in which asset managers make money. The first one is AUM. So the more assets under management they have, people's money, the more they can charge on that, or the higher the fees essentially for the products and so forth. And the second one is the performance fees. Now, we obviously had a recession in 2021, leading into 2022. So last year wasn't a great year. And so the AUM of all of the asset managers basically took a knock. So even though they had new money that was invested through the company, the value of that money decreased quite a bit. So they took a knock there. And also performance fees. You can't outperform in a recession, unfortunately. So they took a knock there as well. But now 2023, 2024 might look a lot better. That's what we are expecting, right? A nice recovery for the economy. So I think all of the asset managers will definitely see better results this year and also next year compared to 2022.
Interesting. If I had to pick one of these types of investments, my personal favorite is more Signia. I don't know, just Coronation Fund Managers. I just don't know anybody that opens new accounts there or wants to invest more there. So, but let's see. Maybe they can turn things around. I mean, they have some really good products as well. So let's see. Heading to the US, some news. We have Microsoft and ChatGPT. So Microsoft is set to add ChatGPT to its Azure cloud services soon. So for those who don't know, Microsoft actually invested in ChatGPT a few years ago. I think it was $1 billion. So they already have skin in the game, and they are potentially looking to buy almost half of ChatGPT, if not all, at a later stage. But this is really it's such a cool tool. I use it every single day. So if Microsoft can really utilize this and monetize it, it will be great for them. Apple is also reportedly preparing to place a bid for the domestic TV rights to the English Premier League. So for all the soccer fans, who knows what Apple might achieve with that. Also in the VR space, Apple is working on a cheaper mixed reality headset to reach more customers, and their first AR/VR headset is coming later this year, and it will be priced somewhere around $3,000. But their future vision is that it will be more affordable, so that they can sell it at scale. And the headset will reportedly compete with the Meta mixed reality set, which is currently priced at $1,500. So very interesting. It will be interesting to see how Apple compares to Meta's metaverse. And finally, the Harley Davidson CEO says that the brand will be all electric in the future. That's a plot twist. I mean, I wonder if you're going to hear the engines. But anyway, that's something the CEO says.
Yeah.
Any comments, Paul?
Yeah, so firstly on Harley Davidson, and then I'll quickly elaborate a little bit on Apple. What is Harley Davidson without the iconic engine, the thrust of the engine? It's almost like Nike changing their ticker symbol to a cross. It's a whole new rebrand, so we'll see where that goes. That's very interesting. Of course, everything we're moving into the EV space, right? Everything is green, everything is electric. So let's see. For a brand like this, it will be very interesting to see whether they can actually adjust to the new world, so to speak. And then on Apple, so this is very interesting to me, the VR headsets. Meta has spent billions of dollars investing into the metaverse, which is, we don't know if it's going to work or fail. We don't know. Are we going to see a future where we have augmented reality, where we basically have how can I say, like normal reality, but then a electrical overlay that basically enhances what we see? Let's say when you see someone, then their basic Facebook profile pops up, like, okay, it's single, 32 years old, whatever, something like that. I think Evolution did a pretty good job, giving us nice graphics and a nice actual real experience, instead of going into a whole new reality, which is this metaverse. So we'll see how that actually pans out. But however it pans out, Meta is the company investing billions into research and development, and Apple is the hardware, and no one can touch Apple when it comes to hardware. So if it works out, Apple is there ready to distribute with the best of the best hardware components for the metaverse or augmented reality. If it doesn't work out, Apple is like, okay, here's my AirPods, MacBook, everything they already have. So I think Apple is just sitting back and waiting for basically anything to come, and they'll be ready. So very, very bullish in my opinion.
They are great at copy, paste, and improve. Not necessarily disrupt or be the first disruptor. But anyway, thanks for watching. Hope you found this useful. Remember, if you want more of these daily highlights, every single day we post the summarized version of all the most important stock market news. So you can stay up to date with just reading it in 1 minute. So what would have taken you probably an hour or more now takes you 1 minute. So it is available on the FinMeUp app every single day. And we do these weekly wraps every Friday. We record and then post it on a Saturday. So hope you enjoyed. Hope you found useful. And let us know which of these announcements excites you. Also, Karoo posted their earnings late last night. Their revenue grew by 29%. But next week, I'll do a deep dive on the FinMeUp app about Karoo and why it's one of my top holdings. So stay tuned for that. Hope you have a great weekend. Cheers.